Now, we just said, strong growth across key income lines. Quarter-on-quarter growth, not so much. I mean, what it really is the story behind the numbers. And I would like to add, it seems to be a trend we're seeing across other banks as well.
Thank you so much.
Yes.
Quarter-on-quarter, you'll experience that across the industry. The growth was not that much. However, that can easily be traced to the activities within that quarter. If you compare to quarter two, the money market yield was quite good. On the average, it was between 15 and 15.5%. But in quarter three, it dropped to like 13, could be 13.2, 13.3 on the average. So I think if you look at, say, a bank like Zenith that is so liquid, and you now look at that drop in that yield, quarter on quarter, I think that would easily explain that, because our volume was still good during that quarter, but it's only the yield was a little bit lower than quarter two.
Now, very quickly, I just want to talk about an impairment charge that we saw in the books. We saw a sharp rise when it came to loan loss provisions in Q3. It was about 2.3 billion naira. Now, why did we see that?
If you look at absolute naira amount, you'll see that it's not that much. And actually, we explained that throughout this year and even before this year, we're on full IFRS adoption. IFRS emphasizes fair value basis. So definitely in our books, we did not actually have new bad loans, but the existing ones, under the fair value assessment, we are saying that in our entire portfolio, there was a drop in our fair value by just a negligible amount of 1.something billion naira. In absolute naira amount compared to actually our volume, you see that it's not much. And we also said that we'll try as much as practical as a bank to be as conservative as we can and as prudent as we need to be.
Certainly it seems so, because OPEX was down, so it seems like the bank has been managing those costs.
Thank you about that. It's complimentary. Actually, we've been promising our investors over time that we'll focus on bringing down our OPEX. That is actually yielding results. Most of the strategies we had at the beginning of the year, we're implementing them through our tactical plans, and it's actually yielding results. And we want to make sure that we sustain that trend to see how we can actually drive down our OPEX, and then cost to income ratio should actually improve, during this last quarter of the financial year.
Now, one thing that a lot of analysts did note is that, and I said it earlier during the interview, that seasonal effect seems to play a part in these results, not only with Zenith, but across other banks. Now, looking at Zenith's numbers specifically, loan book slightly down in Q3. We saw it down actually 0.8%. Deposits up 1.8%. That's quarter on quarter. Now, similar trends with other banks. Is there a seasonal reason for this?
Well, I will not call it seasonal, because seasonal will have a kind of, geographic implication on it. I'll look at it, what were the issues that actually made the growth a little bit the way you're seeing in terms of numbers. The effect of the increase in cash reserve requirement actually came in during this third quarter. So, which means that if additional 4% of your deposit book is actually taken off by central bank, these were some of the measures adopted in this within this quarter to actually, check some of those monetary policies adopted by central bank, and that also will ensure that banks do not have such money. You can imagine a bank like Zenith with a deposit volume of over 1.7 trillion. 12% is under cash reserve requirement, so that will actually slow down a little the rate of growth that we would have experienced in this third quarter. So the effect of the cash reserve requirement actually filtered in so strongly in the third quarter than in the second quarter.
And certainly we're seeing it across several banks. But I don't mean to keep bringing the negative questions, but I have to add, soft quarter when we look at net interest income, also non-interest income, both down. Non-interest income down 9.6%, net interest income down 3.6%. Another trend that seems to...
Well, actually looking at the numbers, I'm sure by the time you go into our website to drill down the numbers, right, you see that our net interest margin actually improved over time. It moved from 8.7% to 8.9%. So in real sense, we actually improved quarter on quarter in terms of net interest margin. Of course, if you are comparing year on year, you see that was a massive improvement over time. So I think specifically talking about Zenith, net interest margin actually improved within that period because, as you would experience, we were not so aggressive in growing, our deposit within this period because the cost of mobilizing those deposits in the third quarter was slightly higher than what we experienced in the second quarter. Right. So we had to actually make do with the size that we had so that we don't increase costs so much.
Okay, well, I'm curious, going forward, any revision to your forecasts? I mean, we know loan growth was around 15%, return on equity assumptions around 15% as well. Are we going to see that change going towards the end of the year?
Well, I know we promised 15% return on average equity at the beginning of the year, and as of today, we are doing between 20 and 21. And the question also came up during our second quarter whether we are going to revise upwards. I want to probably assure the investors that it seems we under-promise and then we over-deliver in this case. And we want that trend to be. There's no need to probably revise the forecast because we have just less than a quarter to go. However, in terms of loan growth, the nature of our loan book here in Nigeria, loan volume is actually a point balance. But in terms of volume, our gross earnings will show that we are very strong in earnings, which shows that we had a lot of transactions, a lot of activities within this period. And we want to believe that, barring any unforeseen circumstances, that trend will continue. So our earnings actually suggest that we've done a lot of business in the past 9 months. And this last quarter, we believe the trend will continue, might even improve on that.